Alright, let's talk about the IPO that's got everyone buzzing Meesho. This one is a big deal, and the question on everyone's mind is this a golden opportunity or is it just a massive gamble? We are going to dig into it. So let's just start with the numbers. We are talking about a whooping 5,421 crore rupees. Seriously, let that sink in. This isn't your average IPO. This is a massive market event, and that number will tells you about everything you need to know about how high the stakes really are. And what does that big number really mean? Well, simply put, Meesho is coming to you, the public, to raise all that cash. They're opening up their doors and asking you to invest. But hold on, before you even think about jumping in, there's a well and there's a huge red flag waving here. It's something we have got to call the profit problem. And where is the profit? I mean, when a company is asking for that much money and you expect to see a solid plan for making money. With Miso, well, that plan looks, let's just say, super foggy. Okay, look at this. This slide makes it crystal clear just how big of a gamble this is. They want to raise over 5,000 crore, but at the same time, they are just almost losing 4,000 crore. This gap is just enormous. It's the huge contradiction at every heart of this IPO. And you got to remember, this isn't some brand new startup we are talking about. Miso has been around since 2015 and we are just coming up on a decade and they still haven't figured out how to turn a consistent profit. Yeah, revenue might be going up, but the actual bottom line, it's just not there. So you might be asking why are they losing so much money? Well, a big reason is the absolute battlefield they are fighting in. I mean, look at this list. They are up against the biggest name in the game. Flipkart, Amazon, Myntra. To even compete with these giants, you have to burn through unbelievable amounts of cash on things like discounts and advertising. It's a seriously expensive wage war to begin. Okay, so we have talked about all the risk and they are significant. But that's only one side of the coin, because despite all those red flags, there is a ton of excitement around this IPO, and it all comes down to one thing: the hope for a big pop on listing day. Now, to get why people are so hyped, you need to understand a term called the gray market premium or the GMP. It sounds complicated, but it's not. Think of it like a sneak peek on early bet on how the IPO will do. It's basically the price people are paying for the shares before they are even officially available. It's a huge clue about the market's mood. And for me, show that clue isn't just a whisper. It's a shout. The grey market premium is sitting at really strong 41%. What that tells is that the market is basically expected to the stock price to jump significantly on day one. If you're a short-term trader, and that is incredibly attractive signal. So what could pour even more fuel on that fire? Simple economics, supply and demand. Take a look at this. Only 10% of the shares are actually set aside for regular retail investors like you and me. And so you have got this potentially huge demand from the public chasing a really small number of shares. That's a classic recipe for price spike. So here we are, on one hand, you have this really serious deep rooted financial problems, but on the other hand, you have all this market hype and excitement. It all boils down to one finally really important question that anyone thinking about this IPO has to ask themselves. So what's the verdict on the Miso IPO? Is it a long-term risk, a bet on the company that, well, let's be honest, it hasn't proved it can make money in any incredibly tough market, or is it a short-term reward, a chance to just ride that wave of hype and maybe catch a quick listing gain? There's no single right answer. It all comes down to what kind of investor you are.